Hello, everybody. We are going to take a look at how much analysts are estimating Lowe's to grow in the next few years. We are going to look at revenue growth and earnings per share growth. And then I am going to give the stock a buy, sell, or hold rating based on the numbers and a fair price to earnings multiple according to me. If you like this concept, remember to subscribe to the channel and like this video, and I will make more of them. You can also comment on what stock you want me to do next. I am going to take the average number of what analysts think the growth will be going forward. So first, we can see that analysts expect revenue to reach $97.26 billion in 2028. That is an average revenue growth of 3% annually. When it comes to earnings per share, they expect $18.24 in 2028. That is an average growth of 8.5% annually. Lowe's stock price today is $277. That means that if you buy the stock today, you are paying a price to earnings multiple of 15 for 2028 earnings if these assumptions come true. I think that is too cheap for Lowe's that is expected to grow earnings steadily in the next years. I would say that a price to earnings multiple of about 20 in 2028 is reasonable for a stock that is growing in that pace. So if we take $18.24 times 20, we get a stock price of $365. That means we can expect a return of 32% if these assumptions come true. That is a compounded annual growth rate of 6%. Remember that Lowe's also pays a dividend of roughly 1.66% annually at the moment. According to me, that is a sell on today's expectations. I do not own shares of Lowe's at the moment. I would like to have a bigger upside potential before buying. I think there are better opportunities in other stocks at the moment. I would consider buying at around $200. Remember to do your own due diligence. Don't take this as investment advice, only for inspiration. Please subscribe, share, and like this video. Thank you for watching.